Hello and welcome to my channel. In this video, we will be analyzing the fundamentals of Aphria. We will break down our analysis into four segments. Firstly, we will learn about the company and its products. Thereafter, we will have a holistic view of the overall industry. Then, we will understand the risks and the competitive landscape. And finally, we will look at the financials of the company. Aphria is a Canadian company headquartered in Ontario that produces and sells cannabis products for medicinal and recreational purposes across the globe. Aphria has operations in 10 countries across the globe and is one of the largest players in the cannabis market. It has operations in some of the major cannabis markets such as North America, European Union, Australia, Africa, and South America. Through mergers and acquisitions, the company has built a portfolio of 2 medicinal and 6 recreational brands. These brands have their individual unique selling proposition and cater to different markets globally. In order to better understand the company, it is important to understand the details of the product that the company sells. There are multiple terms such as cannabis, marijuana, or hemp that are loosely and interchangeably used. However, hemp and marijuana are two different groups of plants, but both of these groups belong to the same parent family called Cannabis sativa. Plants with less than 0.3% of THC are classified as hemp and are used for medicinal purposes, whereas plants with high concentration of THC are classified as marijuana and are primarily used for recreational purposes. THC and CBD are two chemical compounds found in the cannabis plant family. THC has psychoactive effects that give the high when intaken, whereas CBD does not have the psychoactive effects. However, CBD has been found to have a positive medicinal effect on the human body. Cannabis can be intaken in multiple forms, such as through smoking, vapor, food, or oil. Cannabis has been found to have a positive effect for various diseases and health conditions. It is conclusively found to have benefits for patients with epilepsy, and people use cannabis to manage diseases with chronic pain. It is also used to treat wasting syndrome observed in HIV patients. However, a lot of benefits of cannabis are yet to be proven conclusively, and the research is in early stage. Cannabis is legal for both medicinal and recreational purposes across Canada, western states of USA, and South Africa, whereas it is legal when prescribed by a physician in many states in the USA, a lot of countries in European Union and South America, and also in Australia. With increase of awareness and more clinical research results, the relaxation of regulation would further drive the legalization of cannabis across the globe. As of 2018, the global market size for cannabis products was about $10 billion, and it is expected to grow at a compounded annual growth rate of about 30% over the next 8 to 10 years, resulting in an approximate market size of about $100 billion by 2026. The majority of the $100 billion market share is expected to come from North America. The key drivers for this growth is increasing awareness about the benefits of cannabis supported by clinical research and the regulatory relaxation across the globe. Among the 100 global cannabis companies, Aphria is at 9th position by market capitalization as of January 2021. The competition is very high in this fast-growing market. However, there are 3 major risks that could derail the business from its growth trajectory. The clinical research about cannabis is currently in early stages, and if future research suggests a negative health effect of cannabis usage, the consumer perception would change and also regulation might get more strict. The second major risk is the regulatory restrictions. Cannabis usage is a highly controversial and politicized subject. In case of a strong political backlash, changes to regulatory framework could decrease the usage of cannabis. Finally, competition is the third biggest threat to the business. As there is little room to differentiate the product from competition, a strong competition would eat into the profit margins of the company. The income statement of Aphria shows that the top line of the company is growing at a very rapid pace. Within 3 years, the company multiplied its revenue more than 15 times. The gross profit after subtracting the cost of goods remained stable at about 30%. However, the company posted net losses for 2 consecutive years. Also, the earnings before interest, taxes, depreciation, and amortization of the company remained negative for 2 consecutive years. The losses were primarily driven by impairment costs. Looking at the key financial ratios for Aphria, we can observe that the company has a good current ratio, which means it is in good position to meet its short-term debt obligations. Also, the debt to equity ratio has consistently stayed low, which highlights the fact that the company has low debt on its balance sheet. And the gross margins have consistently remained good in the range of 30%. However, the EBITDA and net profit margins have been in the negative for the last 2 years, and also a negative free cash flow per share. I hope you found this video helpful. Thank you.